How you doing, Tim?
I'm doing great. Just getting ready for the cold snap this weekend.
Oh yeah. What are you gonna say? It's gonna get down to 65?
Not, we're going to struggle to get into the 70s. So, I'm kind of digging around looking for my sweatshirts. Um,
70s. I think I just might be wearing like a long sleeve T-shirt with the 70s here. But
Everybody's real concerned. We're turning on our pool heaters and getting ready for the polar vortex down here.
okay, all right. Well, you got a special treat here, Tim. Brianna's gonna be joining us on this interview.
Oh,
Good morning,
fantastic. Good
Tim.
morning.
How are you today? Other
I'm,
than the little bit of cold you guys have.
yes, it's terrible down here.
Yeah,
But
I'm sure. It was
we're
snowing
having,
here yesterday,
I
just so you
saw that
know.
on the news. It made me so happy.
So, Tim, I was looking at a report that you recently put out. Tell me why 13F season is sort of a holiday for value-oriented investors.
Well, I mean, as you know, the 13Fs are coming in fast and furious right now because today is the deadline. But if you take the holdings this quarter and compare them to the holdings last quarter, you can see what all these really smart guys are actually buying and selling with their own and their clients' money. A lot of people say a lot of different things on the TV and the radio show about what they think the market's going to do and what might happen. It's more instructive to see what they're actually doing with the cash.
Okay, so recent Stern AG study that you've been covering. What are they coming up with over there?
You mean in this? You're moving to the small bank space now.
Yes.
Yes.
Okay, small banks. Look, I'm starting to feel like a growth stock investor down here with these little banks. Okay, these earnings reports have been coming in and they're unbelievable. I mean, they're just fantastic. There's loan growth in the commercial side, but the real driver here has been continued credit improvements. But we're seeing 40 and 50% year-over-year earnings improvements, which, for one of my stocks is a little unusual since I'm usually buying, distressed merchandise. But they're all raising dividends. We're seeing lots of new buybacks, lots of activity, and it's all positive for the small banks. The one strong trend that we have noticed is a lot of the small bankers that I'm talking to, and I interview a lot of CEOs for a series that we do on Benzinga, they're getting out of the residential mortgage business. Almost a lot of them. I'm not going to say across the board, but everybody's focusing on that commercial segment of the market because demand in mortgages is too low and it's too competitive a field. Whereas in commercial, there's still a lot of room for growth. But been a lot of fun to be a bank stock investor. Still a lot of these things trading down around 80% of book value. And of course, we had a takeover this week, so that makes us very happy.
Okay, were you involved in that at all?
Yes, yes. Susquehanna Bank Shares is being acquired by BB&T, and in the value income portfolio, we're going to ring the bell for about a 40% gain on that one. It's the eighth bank takeover we've been involved in just the past year.
So do you automatically ring the register on this? You say, "Hey, this was my play. This was my call. I'm getting out. I don't want to own BB&T." Is that what you do?
Well, in this case, I don't want to own BB&T, so we will be selling the stock
Okay.
once we let the ARB settle down for a day or two after the announcement, and then get out. Because usually, if it's more liquid stock like Susquehanna, you're going to see some arbitrage related activity in there, and that's a positive for us. Um, but we'll go. I don't want to own BB&T, so I'll sell it. But often I do want to own the acquiring bank. We've seen that several times this year. Home Trust Bank Shares is one. They acquired one of our tiny banks. We looked over Home Trust and liked it a lot. So we not only kept it, we bought a little bit more. So it's a case by case basis. You have to take it that way.
So, Tim, what activist investors have you been watching lately with as far as their investments in these small banks?
All right, well, it's a pretty good list, but let me give you the ones that we really pay attention to. Joe Stillwell out of New Jersey has had remarkable success for more than 20 years. He likes to brag, and when he files on a new bank, a 13D, he kind of warns them that he's pretty good at this by listing the 52 transactions he's been involved in the last 10 years and how that has ended up for the target banks. Lawrence Seidman, also out of New Jersey, Seidman Value Fund, I believe is the name of his fund, has also a 20-year plus record of successful activist investing. PL Capital out of Chicago is these guys are just sharp. They both come from a bank auditing background. When they walk in and start telling a banker what's wrong with the bank, they know what they're talking about. And again, fantastic track record. A lot of companies pushed to eventually sell the bank. They've had a great deal of success with their 13D filings over the years. Then Endicott Management, they're a little quieter, but they're not afraid to take an activist stake. And then EGF Capital is one. They don't usually file an activist stake, but if you see them in a bank, pay attention. These are the guys that used to run the bank stock part of Friedman Billings Ramsey up in suburban Washington, D.C. And I remember battling against them for bank stock trades back in the 90s. These guys are good and they're smart. And if you see them in a small bank or also a REIT, a smaller REIT, uh, it's time to start reading up. These guys are smart. You're probably going to want to follow them. Then we also really track what uh, Patriot Financial does. So they take a more private equity like approach to these banks. So when you see them coming in, you probably want to get involved. Good things are going to happen over the next 3 or 4 years.
Okay, so you look at the 13 Fs and you look at the balance sheets. What other resources do you use to learn about these community banks? Do you ever just go and knock on, maybe take the Brian Sazi retail approach? Do you ever go and meet with the bank officers or sit in the parking lot and see if they got business? What's your
I mean,
preferred approach?
my preferred approach is by the numbers, the 10Qs, the 10Ks, and the FDIC filings. We have been talking to a lot of small bank CEOs as part of that interview series, and that's been a very enjoyable process for me. I like talking to these guys to get a view of where the industry's going. But really, as with everything, not just banks, I'm more of a numbers guy. I'm going to read the numbers, read the filings, review the loan portfolio, go through the call report data. Um, I not big on talking to executives as part of the research process.
Okay, real quickly, you mentioned Stillwell and Patriot. Tony 2000 was just asking, what are a few of the other people? Could you name two others of people that you like to follow? Their 13
Pa-
Fs?
Patriot Financial, EGF Capital, FJ Capital, again out of suburban Washington, D.C.,
Okay.
and Firefly Value Partners has shown up in just about every uh, bank shareholder list of the banks that I own. Not necessarily an activist, but again, very smart bank stock investors.
Okay. Sounds good. Thanks, Tim.
No problem.
So, Tim, let's say someone wanted to start investing in these small banks. What advice would you have for them to get started?
Well, first off, as with everything, price and relationship to value is the most important thing. I want to buy them around 80% of tangible book value. You need to be careful about the loan portfolio. You don't want to see non-performing assets too much over 2% most of the time. You want to see that they have plenty of capital. And if you're going to start doing this, be aware it is time. It consumes a lot of time. These are not going to be talked about on too many of the financial news networks. You're not going to get a lot of press coverage. You're going to have to learn to dig into the SEC and FDIC filings, but every second will be paid back in spades.
Tim, we always ask you about, you have your large group of stocks that you follow, and at times when the market is at its all-time highs, like it is now, you have a percentage of stocks that meet your criteria. Now that we're back at the all-time highs here, is it? Do you still have that small base in the talent pool to choose from, or is it, being a little friendly here up at these elevated levels?
Now, outside of the small banks, we're still not seeing a lot of new inventory being created. Of course, we've seen a little bit in the energy sector, which has just been absolutely blasted by the Saudi decision to protect market share instead of price. So we've seen some of that stuff come down, but not a lot. Because remember, we put the credit quality on as well as the price to book value. And a lot of the energy companies that we're seeing getting very, very cheap do not necessarily have the margin of safety in the balance sheet that we're looking for. We've been buying a couple, but we're moving really slow.
Okay, and how's your Hercules offshore here? It's hanging out
Getting
here at the buck
getting
50 level.
hammered.
Yeah.
Getting hammered. Yeah, that we've been hurt pretty good in that. We did not anticipate $70 a barrel oil that was going to idle so many rigs down in the Gulf of Mexico. Having said that, I don't see a near-term liquidity event for the company. It's going to be expensive to take some of these rigs offline. Uh, but if I'm looking out 5 or 6 years, I think I'm okay with because that's a pretty good collection of assets. They're the largest shallow water driller in the Gulf. Eventually, I think oil settles above 80 as a, if you're taking a long-term view, and at that price, Hercules will be okay.
Don't frown, average down.
Yeah, I mean, don't get ridiculous about your averaging down, but you might add a little bit more. When an industry's falling like this, I always look at what the private equity guys are doing because they have kind of the same mindset and time frame that I do. And I love Josh Harris of Apollo Capital. He's one of the co-founders on his recent conference call. He's like, look, at these lower prices, energy is an interesting place to invest. He also, like me, feels that we settle out in that $80 a barrel range. And you've got Warburg Pincus just did a $4 billion fund. Blackstone just did a $4 billion energy fund. KKR and Apollo. Everybody's looking at the sector saying, where is this going to be 5 to 7 years from now? And they're coming up with the same conclusion I am, a lot higher.
Okay, all right. What outside of like the value realm between the banks and like some of these offshore drillers, can you remember the last trade or stock that you bought that was not in your wheelhouse?
I don't do that anymore. I'm an old guy now, Joe. Um, I've learned, when you deviate from what works for you, and I've done it, it's so hard when you've got all these great stories at you coming from the press and people that you respect telling you about these wonderful stocks that are going to grow to the moon, and you're just so tempted to pull the trigger. And every time I've done it, I've lost money.
Rob Hood's asking, do you see Hero being acquired? I mean, is that a possibility?
It is a possibility, but it's going to have to be a much larger company because of the debt load that Hercules does have. It's not going to be a merger of equals or a sideways acquisition. It'll have to be somebody big that wants to expand their presence in the Gulf.
Okay. All right. So moving on, Tim. I mean, the market at all-time highs here. Your radar is still, still coming up with some things. Is there anything that you're kind of losing hope on that you've held on for a long time? I mean, we mentioned this Hercules. Is there anything that I mean, I know you like to give yourself, days, months, years to do it. Is there anything that you just, you may be losing a little bit of faith in?
Not really, because I make the decisions based on the balance sheet, not just the price movement. And the vast majority of the companies we have, the financials are holding up okay. The price may have gotten a little cheaper. In some cases, the price has gone up quite a bit over the past year, but there's nothing where we're ready to say we're done with that one.
Okay, final words of advice for investors here, and what is out? What else is on your radar?
Well, I mean, really, the advice that I'm giving everybody right now is if you're not in the small bank trade, you're costing yourself money. The bulk of what we're doing right now is devoted towards the small banks because it's where the best mix of risk and reward is. Hiding out in small banks and cash, some energy and a few other names, but markets are swinging all over the place. We're not even noticing it because the banks don't move. The smaller ones now do not move with the broader market. The only time they move with the market is when you have a significant 2008, 2009 style event. Rest of the time, very news driven, kind of do their own thing. So it's a great hiding place with enormous profit potential. So I'm telling everybody that if you got new money to put it to work, focus on these small banks. You buy them 85% or so of tangible book value or less. They've got a sound balance sheet. Over the next 3 to 5 years, you're going to make a lot of money.
Okay, all right. Tim Melvin, Marketfy Maven, and the author of the Tim Melvin Deep Value Letter. You can check that out on marketfy.com. Tim, very consistent with his picks and approach to the markets, which is something you need to do. Thanks a lot, Tim. Thanks for coming on. We'll talk to you again soon.
Thanks for having me on. It's always a good time.